Long-term thinking is core to the themes of today's seminar. To be ready for the future, we need to embrace change, even as we continue to build upon our foundation and strive to pass something better to the next generation. And that is also how we at UOBAM want to continue to create long-term value for generations of investors.
When markets are confusing, when markets are a little bit chaotic and extraordinarily volatile, let's go back to first principles and see what they're telling us. What is global GDP growth? What is global corporate earnings growth? What represents value at current prices? And what is the risk of a recession this year? Market signals like we saw in fourth quarter are beyond the range of a normal correction. I have to spend a lot of time thinking about, is this telling us something more? Or is this some sort of aberration? And in the end, I'll go back to first principles, and those aren't giving me warning signs. They're telling me that I should stay invested. 2019 should be a better year than 2018. I think should be much more constructive. And in fact, even for things like equities, there's a lot of ground to make up. Even just recovering December losses means you can get close to 10% type gains.
If you ask me, I hope Fed will stop at this current level, but most likely they will probably still hike one more time.
At the end of the day, I feel that most of the time, whether an investor invests or not, is actually coming back from their previous experience. It's really very confusing out in the market when investors, especially retail investors, are constantly bombarded with trade tension, Brexit, valuation, economic growth. They are all conflicting information that allows them to make or not make a decision.
We have 5 great minds here, and I could actually summarize everything they have said in one sentence. All right, I call it the ABCDE of the future of investing. Let's be adaptive and be aware. I don't think you can be in the blind today. So adaptability and then, of course, awareness. I hear loud and clear balanced. Please don't go tipping point. Just have a very balanced approach. And then I hear C, I hear caution. Let's look at downside risks. Let's be aware of the fundamentals, the political scenario, and then learn how to move quickly. Then I hear D, diversification. John says multi-asset. Let's try and have it all. The wonderful whole panel, have it all. But last but not least, let's stay engaged. Let's stay energetic. Let's stay enthusiastic, because the future of investing is in your own hands. Sterling. Thank you very much.
Demographics is not about age alone. Demographics is not about counting the number of young people. It is about 2 things: consumers in the world and workers in the world.
So we want to revolve our strategy around sustainable development goals. There's 17 of them done by United Nations. Why reinvent the wheel, right? If the United Nations, through discussions with all the countries in the world, have come out to say these are important goals, we want to follow them. And these goals are part of their 2030 agenda. You all need to know is that they want sustainable development across E, S, and G, right? Conversion of waste energy, alternative resources, innovative sustainable products.
We believe the opportunities in innovation are far broader than that. Disruption isn't new, but what is new and what makes innovation-focused portfolios a really attractive investment today in particular is the pace of adoption is rising.
Investors have to monitor closely how is the Fed interest rate hike scenario, and also the overall quantitative tightening by all the other central bankers in Europe and in Japan. And in addition to that, there's more policies directions, especially on the trade front between US and China, because this will also disrupt growth, and that will have an impact on the return for the different asset classes.
Make sure you're positioned to manage risk across time, because risks are not always predictable.
Last year, it was a little bit clearer in terms of where to put your money. This year, while it's not as clear, it's actually very much more interesting, because I think the way ahead really depends on us being very adaptable. Fundamentals still play a very important role, but at the same time, we are also accountable not to just the long-term investors, we are also accountable to our shorter term. So in many ways, you have to know how to marry two, the sentiments, the market signals, as well as the fundamentals.